Hey everyone, welcome to our deep dive today. You sent in a whole bunch of articles all about NIO, the Chinese EV maker, and it seems like you're really trying to figure out if they're on the right track or not.
Yeah.
Which is a really good question because the EV market has been kind of a wild ride lately.
It has.
So let's unpack this and see what we can learn, especially from this article from The Motley Fool called The Silver Lining for NIO Investors.
Okay.
It was published pretty recently, November 25th, 2024, and even the title itself got me intrigued. Like, other EV companies are struggling, but there's this glimmer of hope for NIO, and their secret weapon apparently is their margins.
Interesting.
Now, that's something I definitely want to understand better.
Yeah, that's a great place to start. Because to really get a good grasp on NIO's position, we kind of need to zoom out a little bit and look at the bigger picture of the Chinese EV market in general.
Okay, so set the scene for us. What's happening in the Chinese EV market these days?
It is booming, that's for sure. China's the world's largest EV market, and it's only getting bigger. But at the same time, it's incredibly competitive. There's this really fierce price war going on.
Whoa, a price war. That sounds intense.
It is.
How did this all start?
Well, initially, the Chinese government was very heavily subsidizing all of the domestic EV makers, and this gave them a huge leg up, in terms of developing the technology, building charging stations, keeping prices low. Think of it like a booster shot for the entire industry.
Okay.
But this led to, the U.S. and Europe feeling a bit threatened, like their own car companies were being left behind, so they kind of slapped tariffs on all these Chinese EVs coming in.
So it's like this trade war, but playing out in the EV space.
Exactly. And even though the Chinese government has now started to phase out those subsidies, the price war is still raging on. It's all about grabbing market share at this point.
Yeah, so that's a tricky situation for companies like NIO.
Yeah.
I mean, they're in the world's biggest EV market, which is great. But they're also caught in this intense price pressure. How are they managing to stay afloat?
Well, that's the interesting part. Despite this cutthroat environment, NIO has actually seen really strong sales since April 2024, consistently delivering over 20,000 vehicles per month.
Yeah, 20,000 a month, that's a lot of cars.
Yeah.
Where are they selling most of these vehicles?
So they've carved out a nice space for themselves in the premium segment of the Chinese market.
Right.
The EVs priced above 300,000 yuan, which is roughly $41,400 US, and according to our Motley Fool article, they've captured over 40% of the market share in that price range.
Okay, so they're not going for, the bargain hunters. They're aiming for the folks who want a bit more luxury. I have a feeling there's a but coming. Those strong sales. Can't be the whole story, right?
You're reading my mind. While they've been hitting those 20,000 plus vehicle deliveries, their growth in October slowed down a little bit, even as China's overall car market grew by over 11%.
That raises a question. Is their momentum starting to fade?
Yeah.
That's a red flag for sure. I'm guessing the price war is playing a role here.
Definitely. This aggressive discounting is affecting everyone, the entire EV market, NIO included. In fact, their revenue actually dropped 4% in the third quarter of 2024 compared to the previous year. And that's despite selling more vehicles.
Ouch. That's got to hurt their bottom line. So with revenue taking a hit, you'd think their profits would be squeezed even tighter. But that's not what happened, is it?
That's where things get interesting. This is the silver lining that the article's talking about, their gross margin.
Okay.
Which basically tells us how much profit they're making. After deducting the cost of actually making those cars, actually increased to 10.7% in Q3 2024, which is up from 8% the year before.
Hold on. Their profit margin went up, even though the revenue went down.
Yeah.
How is that even possible?
So it looks like they achieved this through some clever cost-cutting measures and also lower material costs.
So they're becoming more efficient even with this price war, breathing down their necks.
Right.
That's impressive.
Especially their vehicle margin, which is the profit they make. Specifically on selling each car, that jumped from 11% to 13.1%. But it is important to note that they're still playing catch-up with some of their competitors.
Yeah, there's always a catch. Which competitors are they trailing behind?
So XPeng and Li Auto, two other big names in the Chinese EV market.
Okay.
They had margins of 15.3% and a whopping 21.5%, respectively, in the same quarter.
So is NIO playing a different game here? Are they focusing on something else other than just maximizing profits right now?
That's the million-dollar question, isn't it?
Yeah.
There could be a lot of different factors at play. They might be prioritizing other areas of their business, like investing heavily in new technology or creating a really unique customer experience. And speaking of new things, remember those new brands Neo's launching? Onvo and Firefly.
Oh, yeah. Let's talk about those. It seems like they're making some pretty bold moves to capture different parts of the market. Onvo's going for a more affordable price point, which seems like a smart move in this price war climate. What's the deal with Firefly?
So Firefly's kind of the wild card here. It's set to be unveiled next month, December 2024, and it's aiming for an even broader customer base than Onvo. We don't have all the details yet, but it's clear that Neo is trying to expand its reach.
Okay, so 2 new brands, different strategies, all while navigating this crazy competitive landscape. I'm starting to see why you call Neo a speculative stock.
Absolutely. The Motley Fool article actually points out that their stock has been very volatile this year, losing 48% of its value in 2024 alone.
Yikes, that's a pretty steep drop. So for someone like me, who's not a seasoned investor, what's the takeaway here? Is Neo a company worth considering, or is it too risky?
Well, I think the key here is perspective. Neo is undoubtedly in a stronger position than they were just a few years ago, with new EVs coming down the pipeline and a growing presence in the market. But it is a high-stakes game that they're playing.
High risk, high reward, right?
Exactly. And the future is uncertain. But it's definitely worth keeping an eye on. You know, the EV market's constantly evolving, and Neo seems to be right at the heart of that change.
All right, so we've got this intense price war, surprising profit margins, and these bold new brands in the mix. It sounds like there's still a lot more to uncover about Neo's journey.
There is. We've only just scratched the surface. To really understand their potential, we need to kind of dive a little deeper into their technology, their brand strategy, and how they're tackling the challenges of this global EV market. Host speaker.
All right, so we've established that Neo is holding their own in this crazy competitive EV market in China. They're pulling up some pretty impressive maneuvers with their margins, even with that price war raging on. But I'm really curious about their technology and how it stacks up against their rivals.
Okay.
We mentioned XPeng and Li Auto are boasting even higher margins.
Right.
So what's their secret sauce? What are they doing differently?
Well, if you think of it like a recipe for success, XPeng's key ingredient is their technology, particularly their advanced driver assistance systems, or ADS. It's basically a suite of features that make driving safer and eventually fully autonomous.
So they're targeting those tech-savvy drivers, the ones who want the latest and greatest self-driving features.
Exactly. And that allows them to charge a premium, which naturally boosts their profit margins.
Makes sense. What about Li Auto? What's their recipe for success?
Li Auto has a slightly different approach. They're focused more on practicality and tackling a big concern for EV buyers, range anxiety.
Ah, yes, the fear of running out of battery power.
Exactly. They specialize in extended range electric vehicles, or ERVs. These vehicles have both a battery and a small gasoline engine that acts as a backup generator.
So it's like having a safety net.
Yeah.
For those long road trips.
Right.
Or if you live somewhere with limited charging option.
Precisely. And because they've addressed this major pain point, for EV buyers, they can price their vehicles competitively and maintain those healthy margins.
Okay, so we've got XPeng focusing on cutting-edge tech and Li Auto zeroing in on practicality and range. What about Neo? Where do they fit in? They're clearly doing something right.
Yeah.
Given their strong sales and brand loyalty.
So Neo has been cultivating this premium brand experience from the get-go. Think of it as creating an exclusive club for their customers.
Yeah.
Going beyond just the car itself, they offer things like battery swapping stations, exclusive club memberships, even lifestyle merchandise.
Interesting. So they're not just selling cars, they're selling a lifestyle.
Right. They're building a brand that people want to be a part of, not just a car they need to get around. And that's a really powerful differentiator.
I can see how that would appeal to certain buyers.
Right.
But does this brand-focused approach actually translate into higher margins?
It's a long game for sure. You know, a strong brand lets you charge a premium, but it takes a lot of investment to build and maintain that image.
So they're playing the long game. Banking on that brand, loyalty paying off in the future. And that's where their new brands, Onvo and Firefly, come in, right?
Yeah.
Trying to broaden their appeal without diluting their core brand. But how do these new brands fit into this whole margin puzzle? Can they really pull it off?
It's a delicate dance. You know, they need to offer competitive prices to gain market share, especially with Onvo, but they also can't afford to compromise profitability. So it'll be really interesting to see how they manage to strike that balance.
Yeah, it's a high wire act for sure.
Yeah.
One wrong step and things could go south quickly. So for our listener who's trying to figure out Neo, what's the bottom line here? Should they be buying Neo stock, selling, holding on for dear life.
Well, remember, NIO is a speculative stock. As the article clearly states, it's not for the risk-averse, but for those who are comfortable with a bit of volatility and believe in the long-term potential of the EV market. NIO could be a really fascinating company to watch. It all boils down to individual risk tolerance and investment goals.
That's a good point. There's no one-size-fits-all answer here.
Yeah. Right. It's crucial to do your own research, understand the company's strategy, and keep up with the ever-changing EV landscape. Don't just jump on the bandwagon because everyone else is. Think for yourself and invest wisely.
Solid advice. All right, so we've delved into NIO's tech and how they're differentiating themselves in the market. But there's another big piece of the puzzle we haven't really tackled yet.
Okay.
The competitive landscape.
Yeah.
Beyond just XPeng and Li Auto.
You're right. We've been focusing on the domestic competition so far. But NIO's ambitions go way beyond China. They're aiming to be a global player. And that means going head-to-head with some of the biggest names in the automotive world.
Okay, so let's talk about the big leagues then.
Yeah.
Who are the major players NIO's up against on the international stage? All right, so let's talk global domination we were just about to dive into. Those heavy hitters that NIO's up against on that international stage. Who are the big names we need to know about?
Well, first in China, you've got BYD. They're actually the world's largest EV maker by sales volume.
Wow, I had no idea they were that big. That's a lot of competition on their home turf.
It is, and that's not all. Then you've got the international giants, like Tesla, Volkswagen, Hyundai. They're all aggressively expanding their EV offerings and aiming for a piece of that global pie.
It sounds like a David versus Goliath situation here. How can NIO possibly compete against these giants with seemingly limitless resources?
It's definitely a challenge. But NIO's playing to its strengths. You know that premium brand experience we talked about? Innovative technology, a focus on building those strong relationships with their customers. They're also being smart with their expansion, using those new brands, Onvo and Firefly, to target specific market segments and appeal to different types of buyers.
Right, it's like a multi-pronged attack. They're not putting all their eggs in one basket. But even with the best strategy, there are always those curveballs.
Yeah.
What are some of the big unknowns that could impact NIO's future?
Well, the global economy is always a wild card. You know, recessions, inflation, supply chain issues, all these things can really shake things up and impact consumer demand.
Yeah, you can't control everything, no matter how well you plan.
Exactly.
What are those trade tensions we talked about between China and the U.S. and Europe? Could those heat up and make things even tougher for NIO?
Absolutely. You know, those trade wars could escalate, leading to higher tariffs or even import restrictions. That would be a huge setback for NIO's global ambitions.
So they're walking a tightrope here, balancing internal strategy with all these external factors that are completely out of their control. It's a high-stakes game.
It is, but amidst those challenges, there are also opportunities.
Okay.
You know, the EV market's still relatively young. It's growing rapidly. There's a lot of room for innovation and disruption, and that's where NIO could really shine.
So there's hope. What are some of those potential game changers that could catapult NIO to the next level?
Advancements in battery technology are a big one. Longer ranges, faster charging times, lower costs, you know, any breakthroughs in those areas could give NIO a huge advantage.
My batteries are like the heart of an EV.
Yeah.
You improve the heart, you improve the whole system.
Exactly. Autonomous driving capabilities. We talked about how XPeng's already making strides there. If NIO can develop its own advanced driver assistance systems, that could be a major selling point and attract those tech-focused buyers.
So it's all about staying ahead of the curve, pushing the boundaries, constantly innovating.
Exactly. And that's what makes this whole industry so exciting. You know, it's dynamic, it's unpredictable, it's full of potential. It's like watching a high-stakes race unfold in real time.
Well said. So for our listener who's been digging into all this NIO info, what's the final verdict? Is NIO a company worth betting on?
Like any investment, it comes down to individual risk tolerance and how you see the future unfolding. You know NIO has a strong brand, they have innovative products, and a clear vision, but they're also operating in a fiercely competitive and constantly changing market.
So it sounds like there are no guarantees, but it's definitely going to be a fascinating journey to watch.
Absolutely. Buckle up, because the future of the EV industry is happening right now, and NIO's right there in the mix.
And on that note, we've reached the bottom of our deep dive into NIO. We hope you've enjoyed this exploration, and maybe even learned a thing or two about the world of EVs and investing.
Thanks for joining us on this journey.
Until next time, keep learning, keep questioning, and keep diving deep